Let's bring in David Katz, Matrix Asset Advisor CIO, along with Ileana Dominguez. She's UBS Wealth Management Senior Vice President. Great to have you guys both here. And David, I'll start with you. And you have had this change in tone, or let's call it the last couple of weeks. Tell me what you want to buy and what you feel about the stock market now.
So we think 6 to 12 months, the stock market is going to be higher, and we've been buying into this weakness. The economic number today in terms of the economy maybe being in a recession with the negative GDP, let's put it in perspective. If we're in a recession, it's going to be a mild recession. And generally, stocks go down about 3 to 6 months before the economy enters a recession, and they start to go up mid-recession. So if we're in a recession, we still think you want to be buying stocks here. There are lots of very solid names out there that are very attractive prices. We like companies like Cisco, Goldman Sachs, Medtronic, Microsoft, all selling at below market multiples, except for the Microsoft. You're paying a little bit more for a great growth company, and they're all down a lot this year.
What if the I'll call it the end of a business cycle, so we don't get all the terms confused here, but what if that end of the business cycle isn't actually coming until early or middle of next year?
Well, we think that the economy is slowing now. It's going to be a pause that refreshes, and we do think the economy is going to start to enter a new growth mode. We think that inflation is breaking, and if that's the case, the Fed is going to be able to be less hawkish next year. So we think the economy is going to be getting better, and the stock market is already discounted a milder recession or a moderate recession, and we think when it's not as bad as that, or when it starts to get better, stocks go a lot higher.
Ileana, what do you say? And it's a remarkable, I have to say, to look at the 10-year yield, which has gone from almost 3.5% 6 weeks ago. After 1.5 points of Fed tightening now in the past 6 weeks, it's down to under 2.7%. That's pretty remarkable. I wonder what, how much heavy lifting that's doing for the market right now.
Hi, Kelly. Yes, it does seem like it's actually working in regards to the initial rates that they've done, especially the 75 basis points in June and July. But with that being said, their target is still 3.25% by year end, which is another 100 basis points. We don't necessarily think that they're going to be raising rates as aggressive as they have in the last two meetings, maybe 25, 50 basis points. But we still think it's a little too early to see if there's going to be a recession or not. We do think if there is going to be one, it's going to be mild as we sit today. I think there's still a lot of uncertainty out there. So with that being said, here at UBS, we're taking a little bit more of a defensive stance.
Shepard Smith here. Thanks for watching CNBC on YouTube.